Hello and welcome. This is the Market Wrap. I am Agam Vakil. Well, after seeing some gains last Friday, we've seen the benchmark indices give up all of them. And in fact, today we're looking at sharp cuts when it comes to the benchmarks, down 1.6% for the Nifty. And we don't have a lot of gainers on the benchmark indices today either. Perhaps a handful. Among those which did advance was Gale India, Wipro, and of course Reliance Industries, which was up around 1.6%. But on the losing end, we have a whole host of private sector banks leading the losses, which would include something like an IndusInd Bank, Axis Bank, or Bajaj Finance for that matter from the space. Tata Motors NSE 500, especially when it comes to the advanced decline ratio, well, not very encouraging out here. We have once again seen gains in something like a Bank of India, Jubilant Life, or for that matter, TV18 broadcast. But on the losing end, we have Bharat Heavy Electricals, which is also in the FNO ban, IndusInd Bank, Sundaram Finance, of course, Aarti Industries is taking a sharp knock. We'll talk about that in just a bit, a little later on as well. Bandhan Banking Tech Solutions looking at further weakness. But on that note, let me get in our markets editor, Niraj Shah, for his thoughts on how things are panned out and what his reading is. Niraj, good afternoon.
I don't know if I had you on a slightly patchy line, and I don't know if my line is patchy as well, but I hope our viewers are able to get both of us very, very clearly. Well, just before I get to the market performance, just need to highlight that new kid on the block, the big listing of the day, the partly paid share, and it listed with reasonable fanfare, you would have to say, fair degree of subscription as well. And I think listed and went up all the way to 710 and was out there for a while, but ended the day marginally in the green. So that's the big news on the new instrument trading. We haven't had partly paid up shares of sorts at listing and trading. So that was the interesting bit today. But the market was interesting. I thought while the larger move was downwards, the export-oriented themes did very well, courtesy the rupee maybe, or courtesy other factors, because the rupee did have a really good day, or really bad day rather, excuse me. But because of that, it cracked to 76, sub 76 to the dollar, as a result of which Nifty IT and Nifty Pharma held out on a bad day. I think what also held out, actually the term held out should be used for the PSU banking index, isn't it? Because sure enough, Nifty IT and Pharma are defensives, but the PSU banks led by Bank of India, and I don't know if there's a future retail deal conversation out there that is leading the stock higher, but that did very well. Stuff like IDBI Bank and Indian Bank also participated. SBI was that one lone ranger in the PSU banking space that actually didn't do well. But otherwise, the PSU banks had a fairly decent outing. Now, these are exceptions to the rule. I think the rule seems to be right now that the markets are headed lower. Though I must say, the Dow futures were at a point of time sub 750, 800 points. I think at about 315 when I saw them last, they were about 500 points. So there's a bit of an intraday recovery. But the larger move seems to be one of corrective moves slash consolidation. And the last few days, Agam, the FI flows either haven't helped. I think the net positions on the derivative side would be interesting, but the fund flows certainly not looking all that great, and the currency is probably testimony to that. Okay, maybe I don't have Agam. We'll try and patch that. But meanwhile, just a couple of things. You have viewers keep in mind that stock specific news are standing out. So today, for example, while specialty chemicals and API companies, etc., were all largely doing okay, RT Industries and Vinati Organics cracked in trade. RT, because they're one of those much large fair fanfare deal, the 10-year contracts that they signed. One of them got annulled. The customer which set up the contract went back, and therefore that stock corrected a bit. Vinati Organics was the other one which corrected in the session today after the numbers that came out were slightly below estimates. So that specific pocket didn't do well. BHGL didn't do well after the numbers. So those are a few things, a few names, stronger names, which have actually had a corrective move in the session today. And the larger mood wasn't the best. Though I must say, the small cap index, the Nifty small cap 100 ended in the green, and the market breadth wasn't all that terrible. But you would have to admit that the market looks poised for a bit of a pullback after a stellar run. We have the April, May, June earnings season slated to come up in the next, 20, 25 odd days as well. And that's the real fear, isn't it? If that season were to worsen off, then you don't know what might happen. But Agam, what else have you spotted?
Well, Niraj, nothing out of the ordinary. And we've been talking about the fact that we are expecting benchmarks to remain consolidated within 9,700 on the lower end, on the higher is 10,500. That's exactly how things are panning out. And of course, we're watching out for some of these levels of whether or not they break. But for now, it does certainly seem like it's going to be about an 800 point odd range as far as Nifty, as well as the Nifty banking index is concerned. I'll keep an eye on some of the data about how FIs have been trading in the futures and options space. But besides that, the only other notable thing that we've seen is the India Volatility Index spike up today by as much as 7-8%, and now it's comfortably above the mark of 30, and that is something that remains crucial for a lot of these options, going forward. But besides that, we aren't looking at too much. Niraj, I'm not sure if you already addressed the public sector banks, but they've also been in focus, and we'll continue to track some of these big names, such as State Bank of India, as well as perhaps the relatively smaller ones like Bank of Baroda, and see how things pan out there. But on the whole, that's what we have so far. So Neeraj, I'm going to take a moment to thank you for that perspective there on the markets. And also on that note, it's a wrap. Part, there's lots more lined up. Stay tuned to Bloomberg.